Hey everyone, I had the wrong mic plugged in after just recording the video, so bear with me. We'll be back to normal tomorrow. Or don't. Hey traders, charting man Dan of the chart guys, checking in on things. So my main takeaway from today was the resiliency in the Nasdaq and in tech names and in semiconductors. And on a day when you had every excuse for money to flee the market, just in the sense of, financial sector was a bear flag, fresh fear lows, the energy sector was down 6.5%. That is a huge drop. Can you imagine the amount of market cap in that entire sector that was down today? And yet you have the Nasdaq closing up 0.5%. So again, when we see all major sectors hitting lows together, we could say money is leaving the market. But when we see days like today, we see rotation going on. We see names getting a bid. We had Amazon up 1.4%, Microsoft 1.8%, Netflix 3%. Stopped out of my Netflix short the remaining position when 300 broke. So I'm back to flat there. Meta up 2%. Just significant green in what could be an all-out fearful environment. So that's very notable to me. And essentially my mindset has been, I'm really cautious bullish as long as XLF is not finding a bottom, and I'm laying off the long side until that takes shape. But you can also have the mindset, these names are positioned very well for when XLF finds a bottom. The question is, how long is it going to take for that to be the case? So S&P 500, I like the 4-hour time frame here. We can see we've got a clear resistance zone in the short term. Little triple top there over the last 2 trading days. Double top yesterday, and then we rejected. Actually, no, that's going back to Friday. So Friday had a double top. Yesterday we rejected. And I'm going to keep an eye on that. And holding the low of yesterday today. So trying to build a base of support. And again, what's going on right now is just a big tug of war. Tech's going up, financial sector's going down. They were definitely correlated a good bit today, but tech obviously a lot stronger. And so it's this tug of war action in SPY, whereas we know the most convincing trending kind of action is when all sectors are going in the same direction together. So Nasdaq, significant bounce. We're coming up on resistance. We'll just use QQQ for these levels. So 398 and 304. If we reject from 398 and pull back into daily consolidation, we'll be watching for the potential of an inverse head and shoulders like setup to be taking shape. And if we look at the weekly time frame here, again, still just trying to hold on and keep this consolidation healthy. And so again, I'm going to be very curious when XLF does find a bottom and gets a couple days of green in a row, because we know the financial sector is obviously going to bounce eventually. So when we get a few green days in a row, does that mean the Nasdaq bulls are headed up to test recent highs? Or do we see some consolidation and rotation back out? Profit taking in the big tech names and money going into the financial sector bounce. That's something I'm keeping an eye on over the next couple of days. So we can see XLF is not bouncing yet. We do have a bullish reversal candle on the daily. Certainly paying attention. We know, any day now, we're going to be looking for a temporary fear bottom to be set. That being said, we have new headlines coming out of Europe. Is this gonna go into Europe? And we've got CS seeing a bunch of headlines, and the backers from Saudi Arabia aren't going to give them any more money, and are they going to be bailed out? And there's just more headlines that we need to be aware of across the pond. But XLF, nice trading opportunity in both directions. We had, a base, or I should say a wall of resistance that we rejected from multiple times to have the bears control the morning. And then into the end of the day, we had a very clear resistance zone. And when it broke, we had a notable amount of follow through. And that was a headline that saw that volume spike. When was that? Just after 2 p.m.? Forget exactly which one it was. U.S. government will likely only sell Silicon Valley Bank to another bank. That was the news that hit right then. And in the end of the day, we have the 15-minute trying to shape up an inverse head and shoulders, but we ran out of time. So hourly trend will be our guide. Bulls are hoping for some follow through tomorrow morning to create the space to try for an hourly trend change. We got the regional banks. Didn't see a lower low. That was notable today. KRE held the fear low. And I'm watching 4-hour tightening ranges. It's not great on KRE, but low, high, higher low. Anything under 49.42 would be a lower high. And if you look at some of the individual names, it stands out a little bit more clearly. WAL, low, high, higher low. And we got PACW, another one. Just a tightening 4-hour range, trying to set the higher low. Certainly very wide, a wide enough amount of range to establish these tightening ranges. But keeping an eye on KRE and XLF to see, is the fear subsiding or not? And we're certainly going to be looking for a volume climax on the weekly time frame this week. So bulls have proving to do, but again, just keeping an eye out for that shift and for bulls to prove something to us as far as a temporary bottom being set. Here's the energy sector, daily bear flag confirming. And again, it doesn't look that brutal, but 6% for the whole sector is very notable. And I talked yesterday about how I was a bit surprised that the energy sector was holding up so well. Well, there you have it. I didn't act on that, but definitely putting it in my memory banks for next time. We know the financial sector and the energy sector are correlated very often. If you were watching back during the CVID days, you remember us talking about having semiconductors and tech and everything over here, and then we had energy in the financial sector, and the names that were hit the hardest over here as far as correlations. And so the energy sector dropped in a big way, and again, I keep highlighting this 4-month chart, but every single chart that had a 4-month stair-step pattern over the last few years has since topped out. The most recent being UNH. Some other notable ones, of course, Tesla, QQQ, all these names rolled over from the 4-month stair-step, and the question is it now the energy sector's turn? Certainly a big bear break from the range that we were trading within for many months. And it is oil that is the reason for that. We're watching this 2-day range and a very clear bear break with follow-through. It required the inventory report yesterday to start getting that follow-through, but we are hitting the lowest levels in over a year on oil. I'm looking down at 61.10 as the next level from here, but we're in a downtrend on every single time frame on oil right now. We're going to look for a 4-hour lower high next bounce, and the energy sector and the oil bears have control until bulls prove something otherwise. Semiconductors holding well along with big tech. So we'll look at big tech in just a moment. Double bottom there. So lower high, now trying for the higher low. Increasing volume. Good sign if the bulls can break that resistance of 246 and confirm that little uptrend there. And again, the weekly consolidation here overall holding EMA 12. Go to the 2-week time frame. Is that a bull flag? Absolutely possible. If the market responds well to the financial sector finding a bottom, that's possible to be a bull flag on the 2-week time frame. Keeping in mind the FOMC is next Wednesday, and that's probably going to play a significant role into whether or not it is. So some of the big tech names, let's just do a quick rundown. So Amazon, again, following through 3 green days in a row. Apple, not as notably strong today, but a little bit of green. Meta has been extremely strong. Look at Meta just put on a show. The 2-day time frame is where I was watching it. Higher low, bull break over 190, and now following through to the highest level we've seen in a very long time. Monthly stair step. Again, eventually, just like I'm watching NVDA, which is not giving us the signals to short it yet. NVDA divided by QQQ on the daily time frame, still holding EMA 12. There was relative weakness this morning, but look at the second half of the day. Relative strength returned. So again, I'm watching for it just because NVDA on the monthly time frame, having bounced triple-digit percentage, is a stair step, and we know that we're likely, a lot more likely than not, to see monthly consolidation eventually. Meta is the same thing. So Meta, all-out collapse, V-shaped bounce, pretty good signal from the monthly stair step bull break at 119. And we're eventually going to lose the monthly stair step and see monthly consolidation. It's inevitable. It's just a question of how much follow-through do we see first. Meta divided by QQQ, same deal. And that is why I was on Netflix divided by QQQ and Netflix short, the exact same setup. Stair step down, stair step up. We know monthly consolidation is inevitable, and it's shaped up for both Netflix and the pairing. So again, these lead bulls, they're still holding on. NVDA and Meta Eventually it'll be their turn. It's just a question of when, and maybe it's months from now, but keeping an eye on that. Tesla. It helped us with Tesla. We were watching it on the weekly perspective, but that relative weakness helped the bears find that weekly consolidation. So Tesla, if the bulls can turn around here and hold this low and break 183.80, that's going to increase probabilities a good bit that the weekly higher lows is forming here. And the big question from there is, can the bulls confirm a weekly uptrend? Certainly going to need a bullish reaction from the FOMC if that's going to be a possibility that's on the table. But we can see Tesla's put in a temporary bottom, and we'll see if the bulls are able to change trends on the daily in response to that. Healthcare is still not doing anything. Still a daily downtrend, daily EMA 12 resistance, nothing changing there. IWM, bear break of the bear flag, but no follow through. If the bulls can confirm an hourly uptrend from here, then we'll call that. If I'm looking at a daily bear flag, you can break it and then bounce and then follow through, which is what oil did. It wasn't a bear flag, but that's how it broke and then eventually followed through. But if you break it, you need a trend change on whatever time frame. So if I'm watching the daily, I need the hourly trend change to say that's a bear break with no follow through. Because right now it's possible it's just an hourly bounce that drops to lower lows. So we have to confirm the hourly trend change. And same thing, if it's an hourly bear break of support and you regain the 5-minute uptrend shortly after, it's a bear break with no follow through. But you need that shorter term trend change to be the first indication that that is what's taking place. So resistance will be 179.26. Bulls need to confirm the hourly uptrend on IWM. XBI, I wasn't really watching it today, but XBI has a lot of space for a daily high or low above 73.87. So bulls are going to try and shape up the daily trend change here. The dollar had a big green day today. Again, can the dollar bulls confirm the weekly uptrend? We'll see. So far, healthy weekly consolidation at this point. Bears would love to confirm a downtrend here. Should say dollar bears. Market bulls want to see that daily downtrend confirmed. Metals saw a bit of follow through. Gold daily brief consolidation into continuation, and that 1960 level, the highest level that we've seen in many months, is back in the picture. So that's a good sign for gold bulls. Silver didn't really see as much follow through. Silver hasn't confirmed a daily trend change yet, so we're going to keep that in mind. And maybe we're shaping up a 4-hour head and shoulders here. And if that were to confirm, then daily consolidation would be underway. Bitcoin just started daily consolidation. So you look at that silver, look at Bitcoin yesterday into daily consolidation today. Not much follow through, but you look at silver's daily candle, it looks very similar. And we know that they both have a similar narrative as far as what's going on with the banks right now. Miners. Gap up for profit taking on the miners. Same thing, daily stair-step pattern, keeping an eye out for daily consolidation. The bulls are liking that, they had some green today while the dollar had a big green day. You'll notice that, remember we had that period of time when the dollar was tick for tick inversely related to metals and the broader market. And then it lost the correlation, the tick for tick inverse correlation with the broader market, and it just started to matter a lot less. And now it has lost the correlation. The number one reason you will change correlation is whatever you're watching hitting a key support or resistance level that then starts to shift things because it holds, or a news event. And so obviously this news event with the metals is throwing the inverse relationship, which was extremely strong for the last couple of months, is throwing it out the window. So we've got a video on correlations if you Google ChartGuys correlations, but one of the main takeaways is correlations are always changing. You should expect them to change. You observe it as long as it's intact, and then when it changes, you make note of that change. So it's like I think the analogy in the video I use is a free-flowing river and the different currents in the river, and it's all swirling around. Natural gas, bear break on the daily, red flag. We have not confirmed a daily uptrend at this point in many months. We had a big bounce, but no follow through. So at this point, the bulls are trying to hold a weekly higher low compared to 210, but again, nice fast bounce. If you do not confirm trend changes, you're not going to follow through. So it's not game over for the bulls, but they have a lot of proving to do. We should be remaining skeptical of these bulls until they prove to us that they can shift this momentum back in their favor. So that's where we stand heading into tomorrow. Definitely watching for a financial sector bounce cautiously. Definitely high risk, high reward, holding it overnight. But we know it'll be inevitable. And then we're going to be watching, does the tech sector continue to benefit from the financial sector finding a bottom? Does rotation go on out of tech into financial? And other than that, we'll be prepping for FOMC next Wednesday. I appreciate you watching. Hope you had a good day, and we will see you tomorrow. Take a lap is something I often say throughout the trading day, and what I mean by that is whenever you have a heightened period of emotions, whether you just had a solid win, a big loss, you just stopped out and you're frustrated, what we have to ensure is that we are not acting in that mindset. So by getting up off the computer, walking around the house, going up and down the stairs, doing some push-ups, walking around the yard, that allows us to take a step back and assess things, establish a game plan, and ensure that we're not acting from that emotional state, because that's how we end up compounding losses, trying to revenge trade, and that's how we can give back our profit if we get overconfident after a big win. So if you ever feel yourself with heightened emotions, and it's important that we recognize that, take a lap.